Hey everyone! Today I'm going to tell you an absolutely incredible story that will change your perspective on building wealth, the story of Sarah, who built for $100,000 in wealth by investing just $500 monthly over 15 years. This isn't a magic formula or some get-rich-quick scheme. There are no complex strategies involved whatsoever. Sarah simply stayed committed to a simple investment plan, and the results speak for themselves. Today I'll share her complete journey, everything she learned along the way, and exactly how you can do the same thing. This story will inspire your own financial freedom journey and prove that ordinary people can build extraordinary wealth. Sarah was 25 years old, a regular office worker living paycheck to paycheck like millions of Americans. She kept her entire life savings of $15,000 in a traditional bank account, earning just 0.5% annually, basically losing money to inflation every single year. One day, her college friend Emma called with absolutely shocking news. "Sarah, my investments just hit $100,000. Sarah couldn't believe what she was hearing. "How did you do that? Which stocks did you buy? What's your secret strategy?" Emma laughed and replied, "I didn't pick any individual stocks at all. I just invested in the S&P 500 index consistently. It's really that simple." This single conversation became the complete turning point in Sarah's life. That night, she stayed up until dawn researching everything about the S&P 500. The S&P 500 is a stock market index, representing America's 500 largest publicly traded companies by market capitalization. This index includes absolute giants like Apple, Microsoft, Amazon, Google, Tesla, Johnson & Johnson, and Berkshire Hathaway. Emma explained to Sarah in simple terms, "I'm not buying individual stocks and trying to pick winners. I'm investing in the entire American economy. These 500 companies literally form the beating heart of America's economic engine." The index covers different sectors strategically: technology, 28%, healthcare 13%, finance 11%, consumer goods 10%, energy 4%, and many others. This incredible diversity reduces risk significantly and provides long-term stability. Over the past 50 years, the S&P 500 has averaged 8 to 10% annual returns consistently. Of course, it's not the same every single year. Sometimes it falls dramatically, sometimes it rises spectacularly, but long-term, the trend is always upward throughout history. Emma showed Sarah the mind-blowing calculation with pen and paper. Invest exactly $500 monthly without fail. Assume 8% average annual return based on historical data. Do you know what happens after 15 years of consistency? The mathematics worked out to this total amount invested: $90,000 over 15 years, final portfolio value after 15 years, $400,000. Pure profit from compound growth, $310,000. How is this even possible? Sarah asked in amazement. This is the absolute magic of compound interest, Emma explained patiently. The money your money earns also earns money for you. It starts incredibly slow in the early years, then accelerates dramatically. This is exactly what the genius Albert Einstein called the eighth wonder of the world. Sarah took immediate action the very next day. She opened a brokerage account with Fidelity because it was completely commission-free and extremely user-friendly for beginners. The first ETF she learned about and researched thoroughly: VOO, Vanguard's S&P 500 ETF, with incredibly low expense ratio of just 0.03%. SPY, the most actively traded S&P 500 ETF with highest liquidity. IVV, iShares low-cost option with excellent tracking performance. She made her very first $500 investment feeling nervous but excited, and then something terrifying happened. The next day she was down $120. In complete panic, she immediately called Emma. "I'm losing everything already. Should I sell right now before it gets worse?" Emma calmly replied with wisdom, "No, Sarah, absolutely not. Set up automatic investing immediately. Same day every month. Same amount every month. Continue investing regardless of price movements up or down." This proven strategy is called dollar cost averaging, and it eliminates emotional decision making. The first 6 months were pure psychological torture for Sarah. She obsessively checked her account balance 10 times every single day, panicking at every small drop and getting overly excited at every small rise. One day Emma sat her down and told her the brutal truth: "Sarah, short-term market fluctuations are completely temporary and meaningless. But your long-term investment discipline must be absolutely permanent and unwavering." Emma gave her powerful historical examples to prove the point. 2008 financial crisis. The market dropped a terrifying 57%, and everyone thought it was the end of the world. But it completely recovered by 2012. COVID crisis 2020, 34% drop happened in just 33 days. But the market hit record highs again in 2021. Those who panicked and sold lost money permanently. Those who stayed strong and kept investing won big, Emma emphasized. Sarah slowly learned this crucial lesson: market drops are actually discount opportunities in disguise. Those scary moments aren't about losing money forever. They're golden opportunities for buying more shares at significantly lower prices. Sarah's portfolio development over the years was absolutely remarkable. Year 1, she invested $6,000 total. Portfolio value became $7,100. Year 3, she invested $18,000 total. Portfolio worth $24,000. Year 5, she invested $30,000 total. Portfolio worth $45,000. Year 10, she invested $60,000 total. Portfolio worth $167,000. Year 15, she invested $90,000 total. Portfolio worth $110,000. Each year, the growth rate increased exponentially. In the final years, compound interest truly exploded beyond her wildest dreams. Sarah never picked individual stocks ever, never tried to time the market movements, never followed hot stock tips from social media. She simply stayed consistent with her plan no matter what happened. Sarah wasn't a finance expert or Wall Street insider. She didn't even have a business education or economics degree. She was just an ordinary accounting clerk working 9 to 5. Her secrets to incredible success started young at 25. Time is absolutely crucial for her. Compound interest to work its magic. Stayed patient during volatility, completely ignored daily market fluctuations and noise. Avoided emotional decisions entirely, stuck to her predetermined plan religiously. Set up completely automatic system, eliminated human weaknesses and behavioral biases. Sarah now says with complete confidence, I used to think you needed to be a finance master or stock market genius to invest successfully. Turns out, you just need to be patient and disciplined. The key to long-term success isn't intelligence or luck. It's persistence and consistency. If you want to start exactly like Sarah did, Step 1. Research S&P 500 ETFs thoroughly. Examine all options like VOO, SPY, IVV, and compare expense ratios. Step 2. Open an account with a completely reliable platform. Fidelity, Vanguard, Charles Schwab are excellent trusted options. Step 3. Start with whatever small amount you can afford. Even $50 monthly makes a significant difference over time. Step 4. Set up automatic investing immediately. Don't let daily emotions get involved in your decisions. Step 5. Be incredibly patient. Don't worry about daily fluctuations or short-term volatility. Sarah says today with complete conviction, the best time to start investing was 20 years ago. The second best time is right now. Today, what does this incredible story teach you? Compound interest can create absolutely great wealth over sufficient time. Consistency is infinitely more powerful than genius or luck. Simple strategies can be dramatically more effective than complex ones. What's honestly stopping you from investing? Is it fear of losing money? Lack of knowledge about markets? Insufficient money to start? Share your honest thoughts in the comments below. What specific obstacles are you facing? Let's find practical solutions together. If you enjoyed this inspiring video, don't forget to hit that like button, subscribe to our channel for more content, ring the bell for more financial stories and wealth building strategies. See you in the next video. Follow Sarah's proven path and write your own wealth story starting today. Asterisk important disclaimer, this video is for educational purposes only and does not constitute financial or investment advice. Sarah's story represents a hypothetical case study. Past performance does not guarantee future results. Please conduct your own research and consider consulting with a qualified financial advisor. Before making investment decisions, all investments carry risk and you may lose money.